Hey traders, Todd here. Welcome to the free video update. It's now Monday, October 8th. Let's see, busy day to start. First I was on CNBC with Melissa. Really cool. I had a good conversation about the stock market and why it's being kind of shook up because of the move up in yields. So we're talking about that. Then we went in and did some S&P and NASDAQ stuff. So I want to show you that, show you the positions that we're in, and also say what's up. You know, as I said, I'm trying not to bother you with too many videos and emails because that's annoying, but there's things happening. So here's the chart that I was talking about with Melissa. I just wanted to kind of take you through that. So this is 4 decades of 30-year bonds and S&P 500. So I'm going to be 40 in October, so this is like my life's chart, right? So the what am I saying? S&P is on the left scale in black, and the 30-year bond is the blue chart on the right. And what I was saying with Melissa was like, if you took a poll of investors and said, what do you think the traditional relationship is between stocks and bonds? She said they'd probably say inverse, and then if you want to watch the video for CNBC, it's linked below. And she's like, yeah, it's actually positively correlated. Like stocks and bonds have been going up for 4 decades. Said differently, stocks and bond yields have been trading inverse for 4 decades. The point that I'm making here is when you see, and there's correlation up here, down here, I should say. Correlation is obviously if this indicator is above the 0 point here, they're positively correlated, meaning they go together. This is stocks and bonds, not stocks and yields. If the correlation indicator is down here, stocks and bonds are negatively correlated, okay? So what this is saying is I would say there's more positive correlation of stocks and bonds than negative. So what you'd actually say is the true relationship is stocks are inversely correlated with interest rates, okay? But the point that I'm making here is we're starting to get the correlation to go into negative territory. And what does that mean when you get the correlation moving towards negative, like we did here, like we did here? This was already negative, but moved more negative. So it's happened 3 other times in the past. And what's happened is, well, here was the 87 crash in the S&P as we moved into negative correlation of stocks and bonds. This was the 2000. Watch that black correlation dive from above 0 to below 0. That was 2000 crash. And this was right at the 0 line, and we got more further negative in the 2007 credit crisis. So here we go. They've enjoyed a positive correlation as the Fed has suppressed interest rates, forcing stocks to rally. But now we're starting to get correlation dropping in a negative territory. So what does that mean? And Melissa was pushing. She's like, what does that mean, Todd? Well, I don't know. I mean, this hasn't happened in 4 decades. We just got to see if the stock market can adjust to this regime of higher rates. So from a technical point of view, the NASDAQ has been selling off a lot. I think the move up in yields, down in bonds has been hitting the emerging markets through the U.S. dollar quite a bit. So I think that's why we're seeing technology really take it on the chin. Longer term, I think we're fine. But I think after one more push up in the S&P above 3,000, then I think we're in big trouble, okay? So I think for now we're okay. I've maintained long S&P positions via SPX butterflies with positive delta. We held support here, and I think we're starting to move higher. This was a pretty nice expanded flat. Let me get off the daily down to the 3 hour. This guy is okay. I was definitely losing some money in the S&P positions on the way down with our subscribers, but we're also pretty short the NASDAQ, and the NASDAQ is in a weird position. The wave count in the S&P and the RUT is clear. On the RUT, I'm not so sure. I'm going to leave that for another video and further in-depth discussion with my members, but there's a completed 5-wave move down here in the NASDAQ, okay? So there's a good 5-wave move. We're pretty short the NASDAQ via I think it said November broken wing butterfly. So I'm up you know, pretty good money here. Let's see. Let's go to today. Up, you know, about $1,200. I was up a couple $1,000 today before the NASDAQ rallied back into the close. This thing, you know, if this is kind of our disaster insurance. If the market gets hammered, you know, down to 7,100, 7,000, you know, I'd be up 11, 12, 14 grand in this trade. I'm up a little bit of money. I'm probably going to take part of it off and focus on our long S&P positions in here. Okay. I'll, as I said, address the NASDAQ in a different video. I'm also short bonds. I forgot to mention it on TV today. We're dropping pretty good. I have a TLT on with our members, centered around the 112 mark. So 112 is right there. We're trading 112.63 at the close. So if we can kind of settle around there, you know, I'm up $800 or so. If we can just kind of stay here for the next week or so, that $800 gets to be $2,000 or $1,500 and stuff like that. So I'm going to try to hold on to this, okay? So that's kind of where we are right now. All right, guys, we're going to leave it there. Hopefully that helps, and we'll see you on the next video update.